The Precious Metals Week in Review, March 18, 2016. Brought to you by Precious Metals International. The U.S. Federal Reserve was the main source of market movements this week as it held its Federal Open Market Committee meeting to determine the course of monetary policy in the U.S. The number of Americans filing for state unemployment benefits jumped by 7,000 claims to a new seasonally adjusted level of 265,000 claims. The previous week's data was revised downward to show 1,000 fewer claims. The 4-week moving average of claims, which most economists view as a better gauge of the state of the U.S. labor market, increased marginally by just 750 claims. The U.S. Federal Reserve held its Federal Open Market Committee meeting this week, and at its conclusion on Wednesday announced, as was widely expected, that it would not be raising interest rates again in March. Last December, after the first interest rate hike in more than a decade, the Fed announced that it expected to raise rates at least 4 times in 2016. The Fed backtracked on that after this week's meeting concluded, saying it now expected to raise rates just twice in 2016. Despite what it steadily describes as an improving U.S. economy, the Fed lowered its target for U.S. growth for the rest of 2016 and into 2017. It seems to be clear from the Fed's statement following the meeting that the Federal Reserve is finally acknowledging that the U.S. cannot operate in a monetary policy vacuum, raising rates solely based on the performance of the U.S. economy. In their press release, the Fed set a decidedly dovish tone, saying that global economic and financial development continue to pose risks. North Korean leader Kim Jong-un, in further defiance of newly increased sanctions by the United Nations and the U.S., fired at least one ballistic missile which fell into the sea off North Korea's east coast after flying nearly 500 miles, according to South Korea's military on Friday. An unnamed U.S. official told Reuters in Washington that the launch appeared to be a medium-range missile fired from a road-mobile launcher. That would mark North Korea's first test of a medium-range missile capable of reaching Japan since 2014. South Korea also marked the second projectile launched from the same region, which disappeared from radar at an altitude of roughly 17 kilometers. Admiral John Richardson, head of U.S. naval operations, noted on Thursday that the U.S. has seen additional Chinese activity which could be leading to further land reclamation efforts around another reef in the Spratly Archipelago. Admiral Richardson said, "I think we see some surface ship activity and those sorts of things, survey type of activity going on. That's an area of concern, a next possible area of reclamation." The reef in question was seized by China from the Philippines 4 years ago, and Admiral Richardson said it was unclear whether the increase in activity was related to an international court ruling that is expected soon in a case brought by the Philippines against China over the seizure. Russia's central bank opted to hold interest rates steady at 11% on Friday and warned that inflation risks remained high and that the recent rise in oil prices may be unsustainable. The bank's statement said, "The current oil market still features a continued oversupply, on the backdrop of a slowdown in the Chinese economy, more supplies originating from Iran, and tighter competition for market share. This is why the certain recovery in crude prices seen in the recent weeks may prove to be unsustainable." The Bank of Japan, BOJ, faced with the strengthening yen as the Federal Reserve's latest FOMC meeting outcome triggered a slide in the U.S. dollar, may be faced with the possibility of providing additional monetary stimulus as soon as next month. The BOJ held rates steady at Monday's monetary policy review, which was widely expected by most economists, but the more dovish tone of the U.S. Federal Reserve's statement may force the bank to act next month if the U.S. dollar remains weak. U.S. oil prices broke above $41 a barrel on Friday on hopes that major exporters would put a production freeze in place, and a continued weakening in the U.S. dollar following the Fed's failure to raise rates. Crude inventories in the U.S. also rose less than expected for the week ending March 11th, according to the Energy Information Administration on Wednesday. Despite the lower-than-expected increase, crude inventories remain at record-high levels in the U.S. The euro spent most of the week trading slightly lower and sideways against the US dollar until the conclusion of the US Federal Reserve's Federal Open Market Committee meeting on Wednesday. After the Fed made its announcement following the FOMC meeting, the euro immediately surged higher against the US dollar. Thursday saw another surge higher for the euro, and it appears set to close the week higher against the US dollar. The Japanese yen traded sideways against the US dollar through Tuesday morning, and then saw a slight rise that was brief, bringing the yen back near even with the US dollar by the time the FOMC meeting was concluding. The yen saw a near vertical surge higher against the US dollar at the conclusion of the FOMC meeting, and continued rising into Friday morning. The yen also appears set to close higher against the US dollar for the week. The US Federal Reserve opted to hold interest rates steady this week and lowered its forecast for the number of further rate hikes in 2016. The Fed acknowledged that it couldn't view the US economy as an island among the rest of the world's economies, and that weakening global growth expectations will impact the Fed's monetary policy even if the US economy continues to show signs of improvement. The Fed's decision to hold fire and weaken its outlook triggered a drop in the US dollar, which has other central banks around the globe nervously eyeing their own monetary policies. In Sweden, which was one of the first central banks to take interest rates into negative territory, Moody's Investors Service is warning that the policy has placed Sweden at risk of an unsustainable asset bubble, potentially in their housing market. The Riksbank cut rates further into negative territory last month, dropping them to minus 0.5% amid persistently low inflation, despite strengthening economic growth in Sweden. The Bank of Japan, which shocked economists when it took rates negative, is nervously watching the yen rise against the US dollar in the aftermath of Wednesday's meeting, and it too is watching its inflation target grow further out of reach despite its stimulus efforts. In Europe, European Central Bank President Mario Draghi has resumed his calls for structural reforms, warning European leaders on Thursday at a news conference, saying, "I'd made clear that even though monetary policy has been really the only policy driving the recovery in the last few years, it cannot address some basic structural weaknesses of the Eurozone economy. For that, you need structural reforms, mostly driven to raise the level of demand, public investments, and lower taxes. Even more importantly, one needs clarity on the future of our monetary union." Discussing the state of the European economy, Mr. Draghi said, "The risks remain on the downside, and some of these risks have been intensifying, starting with early December last year." Mr. Draghi also said, concerning the future path of interest rates, that the Governing Council expects the interest rates to remain at present or at lower levels for an extended period of time and well beyond the end of our asset purchase program. In the UK, as the date of the referendum on whether to remain in the EU draws closer, the Office for Budget Responsibility (OBR) downgraded its forecast for growth to 2% in 2016 from a previous projection of 2.4%, saying that the outlook for the world economy now appears to be materially weaker than it was in November of 2015. Chancellor George Osborne warned that financial markets are turbulent, productivity growth across the West is too low, and the outlook for the global economy is weak. It makes for a dangerous cocktail of risk. As markets digest the fact that the Federal Reserve's hands seem to be tied by the state of the weakening global economy, central banks may react to a weakening US dollar by cutting rates further into negative territory or dumping more monetary stimulus into their respective economies. The race to devalue currencies seems to be heating up once again, and the US stock market seems to be blissfully ignoring that fact, focusing only on the continuation of cheap money due to the Fed's inability to raise rates further. As global geopolitical and macroeconomic uncertainty continues, it remains vitally important to maintain a well-diversified investment portfolio that avoids overexposure to any one asset class. Wise investors have continued to accumulate physical precious metals for the purpose of diversifying their portfolios as prices have remained at levels that provide them with the buying opportunities they seek. Remember that precious metals should always be viewed as a long-term investment. and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, March 18, 2016. Brought to you by Precious Metals International.